Financial advisors are only allowed to offer investments that are publicly traded on Wall Street. Then who should invest in these private investments and equity options?
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset.
Quick disclaimer that I am not a CPA, attorney, or financial advisor. My thoughts and opinions expressed in this podcast are provided for education and informational purposes only. My views are from being a successful business owner, entrepreneur, and real estate professional for over 20 years.
I'm glad you're here. Now let's dig in.
Welcome to the Freedom Point Podcast. My name is Drew McWilliams, and I'm going to be your host today. On today's episode, we're going to discover what private investing is and why do the top 1% wage earners in our country keep talking about these approaches. Sometimes just learning about the wealthy and mimicking what they do can be a good approach, but let's find out more. Since personally learning about passive investing and taking control of what I like to invest my income into the most, it has really been a light bulb changing moment for me. I'm passionate equally about educating others, and I've taken time and energy to learn as much as I can so I can help others shorten the learning curve for themselves. So what does the top 1% mean? It is defined as individuals that have a net worth of $30 million or more. So what do these people typically invest in? The answer is that private equity and real estate. As many of you already know about the great benefits of real estate investments, let's talk about what private equity and private investing is. It is typically defined as a type of alternative investment where investors purchase shares in privately held businesses. This can mean real estate, ordinary companies, venture capital, or even startup companies. This also is the bottom line where it is not Wall Street. These are not publicly traded companies. The fact that I did learn, I had to do some Google researching, and Forbes helped me a lot, so I got to give them credit to the next data. But American publicly traded companies constitute less than 1% of all US firms. So that in turn is private companies. Private companies that have 500 or more employees actually constitute 86.4% of our nation's companies. So pretty high. So thank you, Forbes, for that data. So if the super high net worth individuals are doing these private investing, why don't the rest of us do it? There could be many reasons for that. So let's go through these. First of all, these private offerings are for only to, air quotes, accredited investors. So what does an accredited investor mean? There's income restrictions of $200,000 or $300,000 annually in income for a household, whether you're single or dual income, or that of you having a net worth of $1 million or more, excluding your primary residence. Don't get me wrong, these are really high thresholds still to participate in these kind of deals, but it is now opening up to another 10% of wage earners in America, which is hundreds of thousands of people. Other theories is there's a lack of education and publicity around the subject matter. And I'll be the first to admit, that was truly my fault 1 year ago. Another reason that private investing is not the best, maybe for everybody, is that it's not liquid. This might not be the right approach for many people. An example, my parents in their mid-70s who are now retired that might need liquidity in future years. But I personally think the largest two reasons why people don't invest in these type of offerings is the lack of advertising available and restricted from these. The SEC, or the Security and Exchange Commission, really ensures that the proper individuals are being advertised and targeted to not violate any income qualifications that we previously talked about. Secondly, these private offerings are not going to be offered by traditional financial advisors. Financial advisors are only allowed to offer investments that are publicly traded on Wall Street. Again, only 1% of the companies that are out there in the world. Then who should invest in these private investments and equity options? Assuming that you do qualify based on the thresholds above and are considered, again, air quotes, an accredited investor, one reason why investors choose these private equity routes versus traditional investments is really for a higher income potential. The overall performance of private equity, both projected and realized, have had great returns compared to that of traditional investments. Disclaimer, again, past performance does not dictate future returns. Some people like this model for really diversification. There was a report that I read just last week talking about how traditionally, decades ago, people wanted a certain mix of stocks versus bonds. That has now changed to there's now a third asset allocation where it's stocks, bonds, and private investing should be equal potential tiers in your retirement portfolio. So diversification is a key. Now, some people might not want the bulk of their retirement in one versus another for all of their net worth in publicly traded markets. So this presents a great opportunity for others. Additionally, public markets we have all seen the last several years have a lot of volatility based on the economy, which is another reason why these private investments are typically appealing, as they don't show the extreme volatility as the stock market. Now, what are some examples of these private investments? Real estate is certainly one of them. Oil and gas. I've seen short-term loans called hard money loans to fulfill people's PO orders whenever needing to order inventory that is ordered in advance before they get paid on it. There's multiple different options out there. Personally, for me, now real estate, I enjoy as a potential for not only these passive income advantages, tax advantages, but also an equity multiple on your original investment. We probably all know the saying that there are more millionaires made in America from real estate than any other investment vehicle. For the multiple benefit reasons that real estate has to offer, this is why I've started investing in real estate since age 22, when I barely had 2 nickels to rub together. This is equally why I've shifted my focus to private real estate investing via real estate syndications 25 years later, specifically for the passive income that it produces. Now, to define passive income, that is rental income that is received by owning a percentage of a multifamily complex, but you do not have to answer the tenant's calls, lease the property, or be the maintenance crew. It truly is what my good friend would call mailbox money. I equally, if not more so, like the tax benefits from it. As in many cases, I'm able to write off the majority of the passive income because I receive equally depreciation from each property that I invest in that offsets the majority of the income received. After that, that is not to say that there's not other private investments that don't have the same advantages. I know there's a lot of niches that do so. I'm just not familiar with them. And I'm more comfortable with real estate, both not only from my background that I've had, but also I truly like seeing a physical asset with the money that I'm investing in. Overall, private equity is a great research to explore if you're not familiar with it. This sector is expected to grow as more and more people hear about it. So I encourage you, become familiar with it and truly take the time to wisely pick where you invest your hard-earned money rather than potentially a general publicly traded fund. If you'd like to learn more about something that was mentioned today on this podcast, please feel free to reach out to me. The most precious gift that I can ever give someone is the gift of time, and I'd be happy to share anything I can with you. It's a pleasure being your host today. Again, my name is Drew McWilliams. I'm a partner at Starting Point Capital, where you can reach us online at startingpointcapital.com or on LinkedIn. Again, thank you for listening to our show. We hope that you learned a lot of wisdom from it.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.